everyone, this is the Trader Investor. Let us look at the markets today. I know I'm a little late this morning getting this to you. I got busy earlier in the morning. So let's just take a look at what is my expectation for today. What are trades setting up? There was no trade so far, and I'll go over that and why. So we're going to go over the SPYs, the Qs, IWM, and diamonds. The reason I'm scrolling through all of these is to see if you notice something. And what I'm noticing is that today, so far, we're having an inside day. I talk about inside days quite a lot. Right? Inside days means the high and low of today is contained within the high and low of yesterday. So far, that's where we are. So when we break out of the 15-minute range low or high, I look at what is a potential area of trouble. First sign of trouble is the 15-minute range low, 15-minute range mid, 15-minute range high of the previous day. So on the upside, we have quite some room from 419.20 to 420.12, 420.44. So we do have quite a good distance. But on the downside, from the 15-minute range low of today, where we have potential areas of trouble is the high of last week, the close of yesterday, and the low of yesterday. So price is dancing within that space and is starting to reverse. So this morning, what I would like to see is for price to test the close of yesterday or the high of last week, which is about the same price, and resume its way up. Why do I want to do that? Because then that gives me this distance to here, $1.80. Beautiful distance, instead of this distance here, which is about 89 cents, 90 cents. So this is my preference. Because when we see this tested, break of structure contained within that day. Now, be very cautious. Maybe don't do full size. If full size to you means 2 contracts, maybe do 1. If full size means 10 contracts, maybe do 5, 4. Full size is 20 contracts, maybe do 7 to 10. Why? Because inside days could result in a choppy market. Choppy market meaning price goes up. My drawing tool got lost here. Price goes up, price goes down. It just plays in this tight range. It just does this all day, and you don't want to be chopped around and wipe out your position. So be careful. If you want to take a small position on a retest here, go for it, but a small position, and you have your stops somewhere here. So yeah, we're targeting like I said, this $1.70 to $1.80 against, depending on where your entry is, against 65 cents, right? Great risk reward. You're risking 65 cents move to capture a $1.70 plus move, right? More than 2 to 1. So that's why I want to suggest that be patient, take a look at where the markets are setting up, and enter accordingly. And the Qs are not only having an inside day, the 15-minute range is also an inside day by itself. What I mean is, the high of today and the low of today is contained within the high and low of yesterday. This one, I'm definitely not entering even a small position. Unless we have a tremendous day, we break out of the high of yesterday, test it, and resume. Now this would be an entry. Why would this be an entry? Because our first area of trouble, once we do that, comes once we break out of this, maybe 336 area, from the 334, 335 area to the 336 at more than $1. Beautiful. This I'm willing to do. To the downside, it's a little tricky to the downside. What I want to see is the close of yesterday broken, but where is the distance from that to the low? $1.22. So depending on where it breaks it, if it breaks it, comes and retests it and gives you an entry very close to here, then it's great. But if the re-entry, if it breaks it and the re-entry is kind of here, I don't have the dollar distance, so I'm going to skip it. Remember, skipping is not a bad thing. Even if it goes in the direction you want it to go and you say, oh, I should have entered because price ended up going all the way down here, but because you don't know that until you see it, for me it's about limiting my risk. I want to be able to have a possibility for price to go $1 before it reverses. If that distance is only 50 cents, then if it reverses halfway through, then I'm going to get stopped out, right? I mentioned this multiple times. So I want to see before there's sign of trouble, I want to see distance. IWM now is breaking the high of the 15-minute range of today, but the low of yesterday's range is an area of trouble. So I want to see what it does there. From there, there's the mid of yesterday. So the distance 222 to about 222.79. For me, this is not enough distance, right? This is not enough distance unless we start to break it. By break means it stalls here and it gives me an entry somewhere here, so I can target the high of last week. I can target the 15-minute range high, but from here there's not enough distance for me. From the break, not enough distance, because this could be an area where it stalls, this could be an area where it stalls. So as long as I have this and this in my way, I have this in my way, and then this, there is no rush for an entry. Now this is broken. If we get a good retest back down here, then what is my distance that I'm looking for? The distance that I'm looking for is if I get an entry here, and I can target the mid-range now because the low has been negotiated at $1.26, I will take that. I'll take that anytime. So this is how I am looking at the IWM. Diamonds, look where diamonds went. Broke 15-minute range, right? Bam, smacked the low of yesterday and immediately reversed. And now it is struggling. Why? Because it's an inside day. Inside days have a tendency to struggle. They don't always trend. So as long as you're watching what each one of them is doing and having a plan, you will trade according to your plan. Now, if price wants to break out of here, what's the next area of trouble? Here, here, here. If it breaks out of here, you want price to come down here, retest it, and gives it to you this way. Otherwise, there's no significant move. You can go down to lower time frames, but I don't want to babysit charts, so I'm not going down to lower time frames. So my goal is to always look at the charts maximum on 15 minutes. I look at it 1 minute every 15 minutes and I'm done. If I'm not able to have that 1 minute over the next 15 minutes, 30 minutes, I'm not entering a trade. There's nothing wrong with that. Preserve capital, number one priority. Make money, second priority. All right, everyone. I will see you in the next video at the end of today, once we see what the markets have done and if we had any significant opportunity to enter a position. All right, everyone. Take care.